Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. A counter-to-the-counter bearish harami on Friday, if only just, as well as a hanging man pattern. Now that's traditionally seen as a bearish topping pattern, though data does not support such a view. This after the previous session's immediate countering bullish opening white Marubozu and bullish harami. The market continues its pullback from peaking at the 2019 high at 115.70, and I suppose also from the bright red neckline extension of the August to September 2020 head and shoulders top, currently at 114.67. Plus the congestion area between 114.82 to 114.95, made up from the January 22 high at 114.82 and the February 22 high at 114.95. This had been a new high and high close not seen since November 2021. Overhead, beyond the 2019 high, we have the November 2020 low at 116.02, then the 2023 based upper bull channel line currently at 116.45 and the lower bull channel line currently at 117.08, and in between the October 2021 high at 116.92. I still think it might be reasonable to view this April action as a potential bullish halfway hesitation for possible target, topside target X now in the 117.25 area. Looking below, we have the July 23 high at 112.76 and then the 2024 high in September of last year at 112.13. Finally, as I have said previously and repeatedly, we're now set up with just 4 months of this year gone by for a possible annual key reversal pattern here. Thus, if we close on Wednesday the 31st of December 2025 either over 110.36 or under 103.53, then we'd be on. Anything in between and would have a lesser outside year pattern. I am at this stage not even going to contemplate what the result at the end of this year will be, just that we are set up to achieve one. Now so far today, well, more or less either side of Friday's close right now, though we are towards the lower end of it at the moment. Still within Friday's range though. Cable, UK sterling against the US dollar. A counter-to-the-counter bearish harami on Friday, if only just, as well as a hanging man pattern, traditionally seen as a bearish topping pattern, though data does not support such a view. This after the previous session's immediate countering bullish engulfing pattern. Prices dropped down through the purple neckline, currently at 133.04, of the small but influential mid-November, early December 2024 reverse head and shoulders continuation pattern, as well as the March 22 high at 132.98, stopping just ahead of the August 24 high at 132.65, but were unable to close below the purple neckline or the March 22 high. Now, this purple neckline capped the market 4 weeks ago and tried to do the same 2 weeks ago, but was unable to do so. Further down, we have the Fibonacci and market high based congestion support area between 132.46 to 132.98, which was pierced, and that's made up from the March 22 high, the August 24 high, and the 61.8% Fibonacci line, the June 2016 to September 22 move at 132.46. Okay, so I've repeatedly asked you to keep an eye overhead at the September 24 high at 134.34. The reason being that if prices exceeded that level, and they came awfully close last week, but if they did, then we would have set up conditions for this market to make that rarest of patterns a possible annual key reversal. This pattern has already happened in Eurodollar, but not here, not yet. Just ahead of the September last year high, we have the newly reassigned bright red 2021 to date downtrend, currently at 134.19. Then the September 2020 high at 134.83 and the 2019 high at 135.16, which is actually part of a congestion area between 134.83 to 136.43, containing congestion at 135.81, 136.21, and a February 22 high at 136.43. Meanwhile, further below, we have congestion between 131.33 to 131.44, made up from the December 20 low and the July 23 high, respectively, though I do not know how good a support this would be on any move lower. You probably need to look at the March-based congestion between 128.5 and 130.5 to see something substantial. So far today, well, a lower open below both the purple neckline and the March 22 high, but not exceeding Friday's low, and prices have moved higher. Not as yet stabilizing over that March 22 high and that purple neckline, but we're still below Friday's close right now. We're actually on that purple neckline as I speak. US dollar against the Japanese yen. A reactionary bullish white soldier on Friday after the previous session's immediate countering bearish opening Black Maribosa and bearish Harami. Prices moved further up and away from the August 24 low at 141.66 and towards the 50% Fibonacci line of the January 23 to July 24 move at 144.58. Beyond this, we have little until the lesser Fibonacci line at 146.69, which ties in with the March low at 146.52. Below, we have the dark blue neckline extension for the August to October 2024 reverse head and shoulders bottom, currently at 140.76. And the bright pink upper trend, currently 140.16, 16 of the well-highlighted early February to late March descending wedge pattern, plus the significant 38.2% Fibonacci line, the January 23 to July 24 move at 140.48. Now, this 38.2% Fibonacci line held up the market back in September of last year on a closing basis and did the same last week. We also have just below this the pink lower trend line, currently at the 139.32, just below the September last year low at 139.55. Now, this pink lower trend line is important, as I will shortly explain. Overall, the market remains within the larger, big picture bearish item, and that is the bright red July 24 to January 25 bearish Andrews picture with the bright red upper tie and above, currently at 148.66. US dollar against the CNH, the offshore Chinese yuan. An indecisive doji cross on Friday after the previous session's inverted hammer. The market was capped on the closing basis by the flatlining mauve medium moving average, currently at 729.02, and supported below by the green flatlining short medium moving average, currently 727.63. To be honest, I'm not surprised to see an indecisive pattern on Friday, as the market is butting heads and at the same time unsure about doing so, with the pink lower time below, currently at 728.34 of the bullish shift pitchfork for the late September 24 to mid-March 25 move. Now, further up, we have the July 24 high at 731.13, and some distance higher we have the congestion area between 734.41 to 734.96, containing the October 23 high at 734.75 and the August 23 high at 734.96. Now, there is one new pattern that has recently presented itself, and it's a small one but still significant. It is an April-based descending triangle, currently 727.49 to 730.67. As I said, it is small, but it's still there and worth watching. Now, so far today, a slightly higher open and a reactionary move upwards over the mauve medium moving average, but not strong enough to reach up to the July 24 high as yet, or to the upper trend line of that April-based descending triangle pattern, the small one. US dollar against the Brazilian real. An indecisive doji cross on Friday after the previous session's fifth bearish black crow. To be honest, I was not surprised to see an indecisive pattern on Friday, as the market is butting heads and at the same time unsure about doing so, with the dark blue lower time, currently 566.79 of the mid-August 24 to early April 25 bullish Andrews pitchfork. This is just above the seemingly significant 38.2% Fibonacci line of the April 22 to December 24 move at 565.07, as well as the purple May 24 today uptrend, currently at 563.02. and the low of very early April at 559.22. Overhead, we still have the combination of the slowly declining green short medium moving average, currently 576.94, and the gold flatlining long moving average, currently at 577.16, that are both just over the December 2021 high at 575.78. There is one other key outstanding feature that is still in development. We are set up now for a possible monthly key reversal here. Thus, If we close on this Wednesday, the 30th of April, either over 588.52 or under 584.10, then we'll be on. Anything in between, we'll have a lesser outside month pattern. Right now, we are looking at a monthly key reversal down here. US dollar against the Mexican peso. An interesting combination on Friday here of an immediate countering key reversal down, plus day 2 in a 2-day bearish separating lines pattern, as well as a bearish closing black Mariposa. And this is after the previous session's bearish engulfing pattern. It was the lowest close seen since October last year, as well as the first close below the 2021 low at 1953.63 since then as well. Overhead, we have the April 22 low at 1971.68, and then the significant congestion zone between 1987.96 to 1991.31, capped a little higher by the slowly rising gold long moving average, currently at 1998.45. Whilst further below, we have supports at 1948.68 to 1936.27, and between 1915.03 to 1920.38. The latter is made up from the 50% Fibonacci line of the November 20 to April 24 move and the March 2020 low, respectively. Now looking further overhead, we have a very wide congestion band that eventually became a rectangle top pattern and is centered on the September 22 high at 2057.65, stretching roughly between 1720 up to around the 2083 area. The recent actions here have also set up the conditions for April to possibly become a monthly key reversal. Thus, if we close on Wednesday, the 30th of April, either over 2053.10 or under 2045.80, then we'd be on. Anything in between will have a lesser outside month pattern. Right now, we are very much looking at a monthly key reversal down. Now, so far today, a small pullback up, just over the 2021 low, but not stabilizing over it as yet.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.